It's the Wolf. Today's August 8th. This is week 31 trade recaps. Make sure you guys stick around. We got some magical slides on deck. Make sure you grab that edge. Like this video. Give us a thumbs up. Maybe subscribe to the channel. That lets us know that you guys like the content. We're going to continue to produce it. So let's just jump right in. All right, Monday, EVK. So EVK was pretty strong here at 475. We reported at 8:13 in the technical room that we had eyes on 475, potential inflection point. So we waited for price to come to us. It looked like they trapped some downtick emotional liquidity here. You see the expansive swipe or counterflow trading up into 475. We took the trade, right? The 10-day average volume on this asset is only 420,000, so it's trash, right? It's not liquid product, and all of a sudden you see monster volume come in. It's it's manipulation in our opinion. So we had eyes on 475. Here you can see we zoomed in, enhanced the cut spot. At 10:06, we reported that if you're trading this one, leading data read. When we recognize a leading data read, it means the information coming off the leading data, the level 2, the time and sales, the liquidity heat maps, whatever you guys are using to watch leading data. This is an area where we're going to get a read, in our opinion. So we're reporting this at 10:06 as we're watching it, and then we take the cut. We had the opportunity to take to trade off at maybe 68 bid, but we didn't. We wanted to generate that read, and we noticed that there was strength on deck, and we cut the trade flat, basically at the money, slightly small red trade. But if you look, this 475 area did confirm. Now we don't have a super strong long game yet, but this is something that we're adamantly working on at Wolf Trading, and you can see that this area 475 did confirm multiple times. So that was EVK Monday. AHPI, this one was similar, just low pre-market volume and then ding, 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 massive strength. So this was a 10-minute level up halt. We had eyes on 912. This was the short term, meaning a prior liquidity event to current. So we had, I don't know if it was 3 or 5 trading sessions, but we're looking at the short term point of control here at 912. We put some feelers out at 934. You can see using the trade notes on the left. And we wanted to add at 9.9. It's kind of like a lazy, I wouldn't call it lazy, but we're just putting some feelers out, and we want it higher to get more size on, but we want to compete. Now, at Wolf Trading, we believe that when we're watching tape adamantly, we're burning mental resources. So we don't want to burn mental resources unless we have risk on the chart, right? Because we value our mental resources. So if we're going to go to work and watch tape and analyze and process leading data, we want to have risk on the chart. That's just our opinion. So you can see here in the trade notes, we're letting you guys know we're targeting 8.5s, 26.16s here. And this was at 946 before the tier 1 consolidation even pulled. So you can see here it pulled right off the sheep line, and then we took fills. We didn't get a lot of size, but we're taking profit here, and you can just read the tape notes as it starts to come up. We believe support to be at 813, which is down here. We didn't get that final 25%, excuse me, but we did carry it up into a recycle opportunity, recycle op, based off of the tier 1 point of control here. Now, before we got there, you can see at 1032, which is like right around here, as it's starting to push up and curl, higher low machine, higher low, higher low, higher low, right? And starting to speed up a little bit. You can feel the speed on the tape. We're looking at potential 875 ask, and we're looking for a micro soak on the bid right here at 75, which is right around here. So this is where we were looking to see if we could catch the momentum to come up high enough into our recycle spot. So we wait for price. We allow price to come to us. That way we have a better average, and more importantly, we want to calculate our risk using a scale or a lean, so we know where the risk is. If we're just market ordering in and trying to be aggressive and reactionary or discretionary, we don't that's not really particularly how we trade. So we had a tight risk here. We carried up 25%. We cut the recycle, and it was a green trade, and then you can see the larger participant, you can see the volume here. The larger participants are going risk on here hard versus prior highs, and we just avoided that entirely. So we're happy with this trade. AHPI, again, trade notes, core stop 927 flat. WHLM. This one was a little crazy. We had eyes on 6. Let me pull up some notes on this one. I think it was 653. We were looking for opening exhaustion play. I'm trying to find it. Apologize for that. Got a lot of stuff going on for this video, but yeah, we were trying to find the opening exhaustion. We caught it small. Yeah, nice opening exhaustion. Had eyes on 654. First round is in the money cut. So we're taking a profit, then risking in the money. Now, Wolf Trading, we like the trim and trail technology. We go over that a lot in the room. But these prints right here, actually, we have a slide. These prints here are, what we had eyes on. We posted this in the order flow room as well, but we found that we thought we saw the larger entities selling into organic liquidity here. So we took a snapshot of it. We posted it. These are the prints here. And then you can see here the push off 7, which is right, in this area. Yeah, right here after we took profit, and then we're watching this push here. This is a nice emotional expansive push versus prior high. So this is an M1, meaning the 1 minute time frame analysis. And when we grade extensions, we use the 1 minute time frame because we're looking for emotions on the push. So when you see a pullback, that gives shorts the opportunity to exit at break even, and it also gives long tick or uptick liquidity the opportunity to fight for price and buy dips. So this is a 25% extension here, and it's A+. This is an A+ extension. Now at Wolf Trading, we have videos, introduction to grading setups, but we independently grade resistance, and then we independently grade the extension into the resistance, and then we use both of those analysis tools to come up with the setup grade. We base the grade, and then we use the grade. We have 4 grades: A+, A, B, and C. We use that grade to determine size off of the account size using the R value. But this is an A+ push, and we failed and we got stopped out. This was a losing trade. Yeah, I think it was a losing trade. So that's WHLM. Next slide. Tesla. So here's an example of us trying to get a little bit of a long game on it. Tesla, we had eyes on. We had long feelers out at 708. We're reporting this 957 before this pull, so we wanted it lower to get small 5% bounce opportunity. You can see we filled them, and then we wanted to add 15% lower at low 705s. Now we were risking on the trade. We were risking a 704.48 ask flex. Let's just pull a slide on this. So here, what we mean by that, so we added 5% of the trade here. So we believe that this could be a small bounce opportunity here. Let's use this so we can see it. We put 5% of the trade here. And again, we believe that there's more support here, 15% of the trade. So 3x add right here. And the reason why we do that, we always want to put our larger add closest to risk, right? Because this gives us opportunity for larger risk to reward scenarios. So the risk was a 704.48 ask flex. What I mean by that is if 48, my apologies, 704.48. Now, if 48 can hold the ask and it looks like there's some prints pushing up into the ask and that acts as like flexing on the bid and it's holding, then I'm going to go ahead and cut the trade. So normally when we come up and we develop a risk thesis, whether it's to the long or the short side, if my risk is an ask hold here and it's printing into the ask, now on the micro chart, this might be a 10-second or an 83 tick chart, but if it's constantly printing into the offer, printing, and the offer is flexing on the bid, and that's when we want to cut the trade. So our average was, I think it's up here in the trade notes, it was relatively tight. Again, 15, this is a 3-to-1 add. So our average was in this area here, right? And then here's the risk. So that's the R in the R to R ratio. We started taking 50% of the profit off. We took 50% off in the money, and then we're just unwinding the position as it pushes. We're going to take profit, and then you can see here we risk trailed at the money 708. After we took profit, we trailed risk up to our average at 708.82, meaning that the unrealized column is protected for break even, and then we're starting to pad the realized column here, here, and here, right? And then at some point we trail the risk up in the money. More take here in the money, 707, and then we trail the risk up to 708, 20, 24, and then the trade comes down and triggers us in the money. So basically this is trim and trail to the long side. We're predominantly short bias traders, but we're definitely looking to develop a long strategy because we buy support and sell resistance, and we're starting to buy to enter positions. FLGC. So FLGC is a 31 million float. There's not any news on this. Prior M1 in play. So basically, when we say M1 prior in play, we basically track the volume over time on the bottom of the chart. So the last time that this asset was in play, using the runner's room in Wolf Trading, we can easily historically pull up any historical momentum. And the 1 minute time frame, we're seeing 100K baseline. We're seeing aggression on the 1 minute time frame around 400K. So we just have like a pulse or a thermometer on this algo. Maybe this is hypothetical. Maybe there's an institutional algo that kind of hangs around on the chart, which is common, we believe. And, we want to kind of have characteristics of the institutional, high frequency trading firm that might be in possession of the chart, majority of the time. So we're looking for clues. We're trying to find patterns inside the order flow. That's really what we do. So FLGC, we're watching this. Again, you can see that this is a lower high, it's bullish, but you can see here we had eyes at around like 1024, I believe. Let's go ahead. We have a slide. Let's pull a slide. So again, we post this in real time in the technical room, right? Post a lot in the room, actually. We're not on the mic, but everything that we post is via text or image. We add about 100 of these educational slides to the room a week, and we do in real time. So we posted this FLGC. This is just a front side liquidity analysis while the asset was trading around 1230 in this area here. So we're analyzing the push. You can see that we have an HDF DP right here at 1025. 1025 is right around here. So these are the areas that we're watching. As price gets above this level here, we're watching a little bit of tape. I want to see the bid-ask interplay. Is there sustained pressure here? And you can see it looks like there's pressure here. This is a bar chart, but it looks like there's pressure, and then it kind of retests here. So these are areas that we have eyes on. Now, we're not taking this trade per se because there's not enough emotion on the chart here. If you look in this area here, it's just not there. We want emotion. So you can see now it flips above 1025, and now it's holding a 25 bid. Now we believe, again, this is our opinion, based on the volume over time at the bottom of the chart, you can see when the larger entity or the algo, whatever you want to call it, the larger players are risk on. They have down tick trapped, and now they're pushing against. You can see the volume coming in here at 1430. This is the expansion phase versus this is the counter flow, meaning that they have down tick trapped. This is incentive for them to push higher. So we're actually taking a real-time analysis dive in between this push from 1025 to 1250 up from here to here. We're just analyzing this, and we're looking at this is a 3-tier system. At Wolf Trading, we just believe the current high of day is always tier 1, a small tier 2, and a tier 3. Again, this is like a micro analysis, but we're looking at it as it pushes. These purple lines are areas of clearance. So we're just kind of analyzing the in-house liquidity versus outside participation. We believe, just at a glance, about 60% of the liquidity is in this tier 3. So we're just kind of getting a gauge on it. Now we didn't find an entry trigger yet. We talked about this trade a lot in the room, but we're waiting for potentially exhaustion. So we thought there was going to be another leg. There was another leg here. You can see that we're at 2:30 at 2:29 p.m., which is right here, somewhere in this area. I'm willing to compete, meaning that let's get some risk on 13.4s, 13.9s. So these are all this. We like to post levels of interest before price gets there. We try to stay ahead of the tape, right? So we're not, hindsight. This is in front of the tape. So I want you guys in the students and subscribers in the room, I want you guys to see the levels that I'm looking at, and that way we can watch leading data as it prints inside these levels together, because I think that's where the growth comes from. That's how I've developed any type of tape reading abilities, and I just wanted to share that with you guys. So here's where we're getting into trade. We take some profit. So I had it wasn't too much size, but we're taking profit, more take, down here at 13. And then more take, and then I'm trailing risk in the money or at the money here, and then it was triggered. That's basically how the trade ended up. But I wanted to share this front side liquidity scale with you guys, just let you guys know the type of stuff we're tracking. HJLI was pretty nasty. I mean, this was from $6 to $9 or almost $10, right? This was a nice range, right? A lot of eyes on it. We wanted to compete on it as well. It's a healthcare sector, 6 million float. I forget what the news was. I think it was some FDA breakthrough, something like that. We don't really track the news too much. I mean, again, this is just our opinion, but the news is like algo food, right? The news comes out, people get excited. Now we see outside participation hit the chart, and then instead of us trying to react to the news, we react to the larger players reacting to the news liquidity. I don't know, that might sound confusing, but regardless of the catalyst, we just want to see how the larger players or the larger entities react to the new and fresh influx food chain. It's a food chain, and the small players or the krill of the ocean are the emotional uptick and downtick participants. The market buy orders at high a day, or the low slammers, the slamming the bid at lows. That's the krill, and the larger entities being, the blue whale. That's just an analogy that we use. But here you can see we're early on the trade. We like the range, so we're trying to get some risk on, small, and the trade notes are here. We're reducing risk, adding back, taking profit, adding back, because we don't know what's going to happen. Again, this is extended hour trading as well. But we feel like at this point in time, we're in a good position to start to compete. If we have to reduce risk and add higher price improvement, we can do that, and that's what we did. We took some profit here, and then we're just letting it unwind. Now, I didn't know based on the front side, the A leg here. This is a nice 4-point push, so I didn't feel comfortable recycling back here. I thought it had the potential to really push, and that's where I wanted to add back up in this area, maybe 8 9s. We didn't get it. 837 over under, and we had lotto targets at 7, again at 948, which is very, right after the bell. I'm reporting that the lotto targets are 7, low 7s, and we got flat low 7s. It was a good trade. Let's keep moving. SAVA. So SAVA, we took a small short, and we got a really nice fill here, and I wanted to add more back. Trade notes are here as well. SAVA is a really tricky trader, right? So when you have 100, this is outside the niche. So when you have $100 asset, what we like to do is we like to reduce size by 90%, and that turns a $100 asset into a $10 asset, right? Reduce size 90%, reduces the asset down to 10%. So really, I know it's a $100 ticker. If I reduce size, I'm trading it like a $10 ticker. $10 ticker or a 9, highs right here at $9.35, right? That's in my wheelhouse. So that's how I mentally approach these assets. And then again, $1 of risk is equal to 10 cents of risk on a 90% size reduction. And that's just what I do. It's more of a mental thing, but it helps me. And you can see we catch the unwind here. We got flat at 82.48. Again, trade notes are right here. That was SAVA, and that was a nice fade. BYSI. So BYSI, this was Wednesday. Oh, yeah, okay. This had monster range from $10 to $45. Now, I'm not going to lie. I wasn't awake for this front side move. Now, I don't know what would have happened. Some of my trader buddies got crushed on this. A lot of traders got hurt on this. This was just a nasty move. I'm fortunate enough that I was in bed. I don't hit the desk until 8 a.m. I don't know what would have happened if I got up at 6 a.m. This chart would be completely different. So nothing special here. I just woke up at the right time. I saw pressure here, and I got short. That's really how I approached this trade. I wasn't awake for the front side move, and I'm happy that I wasn't. FLGC. This was a opening strength play, sustained. It had a strong bid for like 15 minutes. So we're watching it a little bit, watching, and we got it a little bit early. We added, once we get that second add on, our rules state that we have the option at this point to trim 25 to 50% at the money if we think the asset's really strong. I think I took 25% off here, and then it was pushing, and I just took it off at the money. I didn't really like this. This is some choppy action, especially at 9:45 in the morning. We believe our mental resources could be better used or allocated towards other tickers, right? Because at the bell, we're usually watching between 6 to 8 tickers. We have 15 charts on screen, but we're really focusing on 3 to 4. Usually, that's just a general assumption. But FLGC, this is when we at the money risk at 13.16. So right here, 13.20. Yeah, 13.16. We just at the money risk, done with it. But at 9.56, when we triggered flat here, we mentioned that we're looking to reload higher, 14.9s. That's where we want to compete. So I had some feelers out at 84, 88, and the 88 didn't fill. But patience. This is just, we believe resistance to be here. We're going to fill passively at resistance, shrinking our risk, which ultimately yields a higher risk to reward scenario. That's just our opinion. That's FLGC. That was a nice trade. KXIN. So KXIN, again, we use historical liquidity deposits to predict areas of potential support and resistance. This is an example of where we believe 272 bid-ask interplay to be of inflectious, which means that if we get a nice extension into that area, we're going to short it. If we get a nice pull in into that area, we're going to long it. And we did that here, 272. You can see 272 here was tested. So this was an area, we had the right level. We just, we didn't catch it at the right time. We're happy with this. Again, it's not about the small pullback here. It's about the pullback at potential inflection at 272. So I think we were red definitely on the short, small, and I think maybe we got out for a wash on the long side. But more to come from the long strategies with us. We're really looking to develop a long game. ANY, we started watching some tape here at 550 on the opening play right here. We wanted it higher, short interest. Forget where that was, but it wasn't at 550. We wanted it more towards 6. We watched a little bit of tape here, didn't like it. We're not going to chase it. We thought maybe we'd get in for a feeler long here, 482. And I tried last attempt here to add, looking for a bounce to get out, maybe 50% break even, but it didn't happen. It continued to be weak, and we just cut the trade right away. We got flat 465, but again, we're going to continue to try to develop a long strategy. WORX was... I don't remember this one exactly. Monster move though, 250 to 350. I guess it's $1, 33%. Don't remember too much on this one. Had short feelers out. Okay, so I had some levels in the technical room. Short feelers out, 328, 30, 32. So I got 15% add here. I didn't really like it. So here's an example, right? Here's an example, yet another example of what I feel or think is getting in the way of systematic mechanical trading. So I thought it felt strong here. So I reduced risk to add back higher. I reduced 50% of the size at the money. And then again, as soon as I reduce risk because of what I think or what I feel, the asset crashes. So, it's not really... I would rather rely heavier on my systematic and mechanical approach than my feelings, because these are the most, in our opinion, these are the most sophisticated machines in the world when it comes to human emotion, right? Their job is to extract wealth out of the market. They want to get retail or unsophisticated investors to shift their plan. If my plan is to trade X and then I see something or I feel something and I don't trade my plan, then the algos win. And that's just our personal opinion. But here you can see we're taking profit systematically here, and we're trailing risk down. You can see this image, this slide on the bottom of the screen. So once we take profit, we trail risk, trim and trail. This protects the unrealized column. So you can see we had targets out. Here's our risk, and you can see ultimately it swiped and we stopped out. That's a good trade. We'll take that trade. You know, the trim and trail ultimately in the long run is in the best interest of the operator. That's our opinion. BTBT. BTBT has been on screen or on radar for multiple weeks. This is just another attempt at BTBT. So we have a lot of notes in the room. I'm not going to go over all of them, but we were patient enough to wait. You know, we mentioned this early in the morning that we had eyes on like 19. We even said we were thinking about shorting calls at 19. We ultimately didn't do that, but we feel like we have a good read on this. It's a digital asset crypto sympathy equity play. We actually did pull up BT. We pulled up Bitcoin a little bit, and it's on our radar now. We're not big crypto traders, but you know, we're tracking this. Again, we took some profit off slightly in the money, 25, looking to add back higher. Its assets started to break down. We took some profit. Here's the trade notes on the left. And then we trail risk. Sometimes we get top tick trigger, right? We believe this to be soft supply right here, you know, 1850, 18 in the money risk at 1856, sit on hands, meaning I'm not going to change or shift my upside or my downside targets, and we got a top tick stop out in the money, which is fine because again, as mentioned earlier, in the long run, this is in the best interest of the operator. This is a green trade. I like how we traded this one personally. If I can replicate this systematic approach over and over and over again, I think that there's longevity in it. Yeah, so sorry about that. This video ran a little bit long, 27 minutes. But, you know, that was week 31, and hopefully you guys enjoyed a little bit. If you have any questions or you'd like to join the Wolf Trading server, just give us a message at the bottom. So thanks a lot, guys. And also, here you can see, speaking of the Wolf Trading room, here's some live trade notes from last session's pre-market. This is basically just a normal day, actually a little bit of a slow day. You can see the low float scanners are sluggish, but this is basically what it looks like inside the trading room every single day. These are the trade notes pre-bell. Again, you can see at 9:30, risk is king. Good luck, everyone. Be safe, be smart, stay safe. So this is basically what we have to offer in the mornings. So if you guys are interested in that, here's a quick look also at what we have to offer in the room. Here's the Wolf Coaching trade room where we post, this is our video library. You can see we have some indicators that we use. We have some thinkorswim scans, then some our video library. There's a lot of, you know, we think the education that we have to offer is good. I mean, of course we're biased, but give us a look. Again, we're going to change the structure of the room beginning Q4. So if you guys want to jump in the room, it's only $2.99 at this point, and you'll be grandfathered in. Here's the technical room, some slides that we have, more stuff on BTBT. You know, we track the VIX. We trade options a little bit, mostly defined risk strategies, cover calls, stuff like that. XKIN. XKIN, we went over this. 272 was the level that we were looking at. And again, here's more from BTBT. You know, at 8:12 in the morning, we're looking at $19. Again, 9 o'clock in the morning, we're bullish on the asset. It can run longer than you think. And again, you know, early at the bell, we're talking about let's get short. You know, 18.9's 19 right here. The order flow room. So we believe that there's a lot of edge in the order flow room. I don't want to show too much of this room, but if you're interested, come give us a look. We use leading data to confirm or deny trade theses. That's how we trade at Wolf Trading. So we're heavy on order flow. We don't trade moving averages. We sell resistance and we buy support on tight risk using leading data. That's what we do. So if you guys are interested in anything of joining the room, we'd love to have you. Take a look at the bottom of the details under the video for more information. Again, guys, thanks a lot for staying with us. We really appreciate your time, and we'll chat soon. Thanks a lot.